Good morning, everyone. My name is Antonio Correia. I'm a senior tax advisor at EFAMA. It's the European Funds and Asset Management Association. We represent the voice of the industry at the EU and also at the global level. And what I'm responsible for four work streams: the Taxation and Accounting Standing Committee, and also the Accounting Task Force, the Blockchain Task Force, and the VAT Task Force. And I want to start to thank Ali and WTS and Suki for another invitation, and it's really a pleasure to be here again, face to face. Thank you for that. And also for the interesting challenge of discussing the FTT. That was something that I thought would be locked somewhere, but apparently the discussions may be reopened soon at the EU level with, and that is what we will be discussing today.
Hi, everyone. And again, thank you so much for the invite. I think we're delighted to speak on this topic. We feel like we've got lots to cover. So my name is Sinthu Sivakumaran. I'm currently at JP Morgan in the EMEA tax team, doing a lot of sort of front office support type work. I'm a UK qualified lawyer by background, trained at Latham & Watkins. I was there for 8 years before moving over to JP Morgan, covering a lot of the market space right now, which is very interesting and certainly interesting in the context of financial transaction taxes. So I think what we are proposing to cover today, and I think it's been discussed in various industry forum, I should add to that I chair the European Tax Group at ISDA. Obviously, I think we're both very integrated within industry forum discussions on this topic, but in the broad umbrella of financial transaction taxes, I think Antonio is going to take the lead and speak about the European FTT proposals. Obviously, a huge background to that, refamiliarizing ourselves, I think, with the drivers, the rationales, thinking about what the roadmap might be going forward, and potential views and thoughts in relation there too. I'll sort of weigh in on the Spanish, French, Italian transaction tax experiences. I'll keep that relatively brief because the thing I'm very excited to talk about, and I can say that in this room, is Hungarian FTT and the securities aspect of Hungarian FTT, because it's just been causing a lot of, I guess, discussion amongst the peer group. So with that, I will leave it to Antonio in his safe hands.
Thank you. And I'm also interested in listening on the Hungarian FTT. That was something that, while preparing, and even it was something new for me. So really looking forward to it. So at the EU level, in a short version, you have a path from 2011 until 2020, where the discussions took place till now, and you have three different proposals. A first proposal that would, and the aim of the Commission back then was to stabilize financial sector and increase equity in taxation after the financial crisis. So the idea was to have a broad-based FTT, and the initial proposal from 2011 was rejected by the majority of member states. The discussions followed. In 2013, we had a group of 11 member states that started the procedure to implement an FTT in a different model under the enhanced cooperation procedure. And those discussions are still ongoing. And what we see is that little progress has been made. In the meantime, back in 2016, Estonia left the UNESCO Corporation. So now it's only a group of 10. You need 9 member states to keep the UNESCO Corporation running. So we don't know what will happen in that file and in that group. We know that we saw progress in 2019 when Germany, backed by France, started discussing a draft proposal built on the French FTT model. Those discussions at a certain point, they stopped. And basically, it more than technical, it was a political issue. And because member states started discussing the mutualization of the tax revenue that would be collected under the tax that was being designed. And then under the presidency of Portugal, we saw a technical discussion, not a political one, just to understand what would be the possible agreement, not only in the group of 10, but the debate was also expanded to all member states. And there is no agreement on the EU FTT, neither at the level of the group of 10 and the other proposals for the 27, back then 28 member states was rejected. So what is on the Commission's agenda right now? We saw that the Commission started its task to deliver on the new own resource package that needs to be approved to finance the EU budget and the recovery plans. And this year they delivered the carbon border adjustment mechanism, also the EU emissions trading system, and they are expected to deliver also the Pillar 1, where they are expecting to get some new own resources building on what would be the share of the residual profits that would be reallocated under the global tax reform that is ongoing. And the Commission, after delivering this first basket of new own resources, is commissioned to deliver a second basket of new own resources. And members of the Parliament and policymakers are already saying that will be needed. So it is in this context that the Parliament and the Council mandated the Commission to do one of two things. First, if there is an agreement on the EU FTT under the INS Corporation, to start working on a proposal to transfer revenues for the EU budget and to make this a new own resource. Most likely, we will not have an agreement under the INS Corporation, as I said, with all the background that I just described. And the second possibility is to start working on and propose a new own resource and building on the new FTT. And they need to do this to release the proposal by June 2024 to have it introduced by January 2026. If this is what will happen, the Commission must be starting working on this file as we speak. So it is in this context that we accepted the challenge to discuss the FTT. And for EFAMA, we have a clear view, and basically, I guess, all financial sector is at the same view. The FTT is not a good idea. And for funds and asset managers, it's really a not good idea to impose additional layers of costs on that will automatically be imposed on end investors. And also, it is not a good idea in the context of CMU, where we want to protect with the free movement of capital, the capital markets union. If we want to do that, and we are working to remove the withholding tax barriers that we heard today already, we should not be taking with one hand the barriers and imposing new barriers by creating an additional cost on the free movement of capital. And so for us, this should be really reconsidered, and I'm sure that there will be other solutions to get new own resources, not from the financial transactions. And if these taxes are to be designed, care needs to be taken, and at least we saw that in the proposal from 2011, 2013 less, but and in the 2019, the French model, we saw the proposal being drafted and enacted with exemptions for usage and tapes, which is good news, at least to protect the primary level of investment. Obviously, that does not exclude all the other risks and all the other costs that are imposed on the investments, but it is still something that I wanted to share with you. Apologies if I took too long, but probably what we can hear is and from Sinthu is what practical issues on the implementation and on the different models in France, Italy, Spain, and now in Hungary.
Yeah, absolutely.
Handing over.
No, thank you for that. And so just a quick whistle-stop tour, I guess, in terms of rates. So France, the equities FTT is set at 30 bips. Spain is 20 bips. Italy is 0.1 for on-exchange trade of equities and 20 bips for OTC derivatives. That's right. You can bring your OTC derivative to the 10 bips rate if you comply with certain reporting requirements and other additional hurdles. What's actually in scope? So equities that fall within a particular list, oftentimes defined by market cap. What is good about these taxes is that it's very easy to operationally implement, in theory at least, because they are static. There is a list that you can look at, you can feed into your operational systems, and our ops teams can therefore then pick up quite comprehensively. The Italian tax should be differentiated. I mean, I've left aside high frequency trading because we don't have enough time to cover all bits of these wonderful taxes, but the Italian tax obviously has a derivatives tax as well. So it's not just the equities piece that would extend out to in-scope equities and ADRs, but also a potential, well, an existing tax, I should say, in relation to derivatives that have an Italian nexus, and nexus in the context of a basket underlying, for example, would mean that you needed at least 50% of in-scope Italian equities. So that's the quick background. I mean, these taxes have existed since about 2012. Spanish FTT, for those that are unfamiliar, is the most recent, bar obviously Hungarian FTT, which I will come on to. The Spanish FTT came into play Q1 2021. So Antonio, to your point, what's interesting in terms of operational aspects of this, what's keeping us interested in this, given the taxes already exist? I mean, what works in this space is that there's very much a clear, to some extent, market making exemption. And so as a broker dealer, the work that we would do day in, day out in relation to handling of securities, you would expect to be exempt. Now, the scope of the market making exemption does vary in theory between these three taxes. So you can see, for example, with the Spanish system, there's a more clearly defined, by way of exchange membership qualification, scope to the exemption. There's a bit more grayness over that requirement in relation to France. Italy is very much off on its own, and the scope of market making exemption is far more limited. So, for example, you can use it to hedge OTC derivatives. But in the most part, there are also other exemptions that could apply to kind of get broker dealers comfortable that they are undertaking activity, at least in line with their peers, and certainly not, additionally sort of picking up taxes, I would say. So there is an element of consistency. There is precedent in terms of testing of case law. There are advisors that are willing to opine on the scope of the market making exemption, and that's all very helpful. And to a contrast to Hungarian FTT, which I will come on to, you can tell I have some qualms about this already. So the other operational thing that's quite useful with these FTTs, I think, is that we've had a long time to think about things such as exemptions, such as how we, as the responsible person for the tax, get comfortable that an exemption might apply to our client. And that might come in the form of, in the case of Italy, an exemption form that exists, that our peers and ourselves, we have got comfortable works, and our clients pick up and sign because they are happy to make those representations. They have seen that form of indemnity, and there's not much negotiation. So those sorts of things are all very helpful. And to the extent that that can be carried over in an EU FTT proposal, it would be great. The other things that are helpful are having sufficient lead time. Again, spoiler alert to Hungarian FTT, where there isn't that much lead time. We will need, despite the fact that the EU FTT proposal is based on existing taxes to some extent, we as a big global enterprise and our peers will need sufficient lead time to have operational capability to pick up the tax. Certainly if we are the responsible person for it, which I expect we would be. So things like having those exemption forms, having lead time are all very, very helpful. So as I said at the outset, I didn't want to spend too much time in relation to these particular taxes, but one thing that is worth, I think, saying up front is that things aren't all settled in relation to these taxes. I certainly wouldn't have a job if that was the case. So, we still have the need to go out to advisors. There are new scenarios that come up. There are new precedents that come up that warrant us seeking advice. And certainly that is also what I hear from peers for the same reason. There are also proposals that keep us sort of edge of seat. So I think for the French case scenario, in the last couple of weeks, we've seen proposals come up to the Finance Committee of the National Assembly to increase the rate of the FTT to 50 bips as a revenue raising exercise. We've seen the proposal to introduce, like Italy, albeit perhaps a bit more aggressive might be the wrong word, but a tax on derivatives that would essentially see a broker that was either a French FI, a financial intermediary, or facing a French FI in scope for the tax. And I believe that tax was at 10 bips. So, there are new proposals coming in, day out. I think there was a suggestion to get rid of intraday netting, which, to my earlier point, for those entities within groups that cannot benefit from market making exemption, it's crucial that they have an exemption that they are able to avail of. I mean, obviously that sort of hits pockets of traders and firms if that's not the case. So these groups are set up in complex manners. I'm certainly not speaking just on behalf of JP Morgan in this respect. I mean, you can expect that with the amount of regulation that there is these days, you will need entities that may not have exchange membership, but are in, non-bank chain, for example, parts of a business so that they comply with certain regulations. And, they may well need to utilize exemptions outside of market making. So the removal of intraday netting is of huge impact potentially for those entities and those groups. And without sufficient lead time, back to my original point, without sufficient lead time, there is very little that can be done, at least in the short term, to mitigate the potential exposure to tax. Now, having said all of that, those proposals were shot down, I believe, in the latter part of last week. So actually, I could breathe a little bit after that, but I suppose a permutation of that is likely to arise because governments are certainly in these times, and with bearing in mind the context that which we're all brought here today, where it's times of crisis, it's revenue raising, it makes sense to think about what you can do. And I think the National Assembly were quite usefully pointing towards the fact that some of these proposals seem to be suggesting revenue raising when actually they would drive businesses away from France, and perhaps the 1.7 billion euros that was raised in 2021 and only going up for FTT is sufficient in light of that, because it's a number that you can sort of not guarantee, but is not an insignificant number, shall we say, whereas the risk of driving business out, especially in these times, is quite a critical one. So let's turn to Hungarian FTT. I feel like I've hyped this up quite a lot, so apologies if it doesn't live up to expectations. But Hungarian FTT comes in two flavors. So it's the securities FTT version, and that's a new tax. And then you've got the payments FTT version, which is in relation to certain cross-border payment services. And that's an extension of an old tax. What's interesting about this, so I'm going to focus on the securities FTT piece because I think it couples quite well with the EU FTT discussions, and certainly is more akin to the Spanish, French, and Italian points that I've already sort of covered. So the securities FTT piece was introduced not that long ago, really. So earlier this year, and I think a lot of foreign brokers weren't too interested on the basis that it seemed to only hit local brokers. And then we were told, it was announced in July, I believe, of this year, that the tax was to be extended out to foreign brokers as well, with an implementation date of trade settled from the 1st of August. Hearing that in July was challenging. Looking for a good word there. It was challenging. It was interesting. It got juices flowing in terms of being able to have very good academic debates internally with peers and industry forum, etc., and with advisors as well. Of course, quite challenging also because it is the summer holidays in Europe and trying to find advisors is quite hard. So this particular tax, let's kind of delve into the detail a bit. So it was a revenue raising measure. I believe that it is meant to be in place at least for 2 years, but it's fully expected that it will be extended out. The first reporting date was the 20th of September for trades that settled from the 1st of August. The value of the tax, so the rate of the tax, 30 bits, but it does come at a capped rate. So, and the cap is quite low, so 10,000 Hungarian forints. So that's the equivalent of $25 US. Question mark over how that cap applies, and I think that's the interesting bit. There's no market making exemption, no intermediary relief, no intraday netting. So if you're caught, you're caught. And the kind of brokers that would be caught here are those that are passported to provide investment services in Hungary. So you would expect your EU entities or those acting through a Hungarian branch. All HU ISINs are in scope that are issued by the Keller Securities Depository. I'm not so familiar with how many Hungarian ISINs there are, but even if you have one and you're an in-scope broker, you've got a compliance risk there. We certainly have. You would expect any global bank to have more than one. So HU ISINs is also a point to flag up because the current FTT models that I just went over for the 3 jurisdictions, they deal with equities, whereas the Hungarian model deals with equities and bonds. So we have, and our peers will have our fixed income businesses sort of say, hey, what's this Hungarian FTT about? Why do I care about it? I never really had to think about FTTs before. So it's been interesting in that regard as well. So it is the case, I would say, that operational folks had been hoping for something akin to the other FTTs. And so the broadening of scope and the lack of also a list that one is able to turn to in terms of in-scope ISINs that is static proves quite a challenge for them. The other bit that is quite challenging is trying to figure out what a purchase of Hungarian ISINs actually looks like in the day-to-day activities of a global broker or bank. And it may sound simple enough, but if you sort of break it down, I mean, you've got the purchase in the kind of cash equity space. You would expect that physical settlement of Hungarian shares would be, and bonds would be in scope. You would have a question mark, I think, potentially over sale and repurchase agreements. So what does your repo look like? Is it a lending transaction? Certainly a lending transaction for accounting purposes, you would suggest. A collateralized loan, I believe, is how it's treated as. Is that a sale? Is that a purchase? I mean, that's something that has come up in many discussions, and it is an interesting point. is it the case that primary issuances are out of scope because the law itself is only a paragraph long? Now, you would expect so because EU law tells us that it should be, but the law is not as granular as others that we have seen. And I think that's interesting because we have to sort of leverage broad advice and knowledge in order to form internal views or industry views. The other thing that has come up is in relation to collateral and securities lending. In that scenario, I think one can probably get quite comfortable. You don't have a purchase of securities. It doesn't feel like a purchase. It's defensible as not a purchase, perhaps. And certainly that would bring us more in line with the other FTTs to have that out of scope. There is in the payments FTT space a more restrictive view of the tax. And I don't know if it is intentional that the securities FTT is as broad as it is. So the payments FTT, and I did say I didn't want to cover that in much detail, the payments FTT is restricted to when you face a Hungarian client, whereas this securities FTT version doesn't explicitly state that that should be the case. The payments FTT also has a number of exemptions, including where you are facing a Hungarian financial intermediary in certain cases. So, I don't know if what we're seeing is the evolution of what the securities FTT is to become, or an intentional omission, but certainly a watch this space moment. In terms of what a purchase looks like and how the cap is applied, the kind of max cap for this tax, that also brings about interesting questions in the context of quite BAU cash equities type trading. I mean, our setup is probably is probably very much in line rather with our peers. So you will have a client that comes to a broker that is a foreign broker that is in scope, let's say a German entity, that faces off against a local broker, Hungarian broker, that acquires shares for your end client. Let's say that end client is not Hungarian. Say that the Hungarian client, the end client rather, who is non-Hungarian, would like 100 shares. Let's say they want to split that out 50-50 between two of their funds. Foreign broker, our German broker, decides that they will follow best execution practices. They will go out into market. They will fill that order 10 clips of 10. Where does your cap apply? On your 10 clips of 10, on the 100, on the 50? It's a question that goes round, I think, and everyone has an angle on it. Certainly one is tempted to take a very conservative view on this, but perhaps that's not in the spirit of what was actually intended, and doesn't actually make sense in the round. But it does raise a number of very, very interesting questions. What also remains to be seen is how many hits of this tax we see. So you would expect the foreign broker as the primary responsible party, and it seems that there is no concept of secondary liability in relation to this tax from what we have ascertained so far. Is in scope and is responsible for their piece. But does the local broker also charge, because they purchase Hungarian items and they seem to be within the scope of the tax? And if they do, as a commercial matter, do they pass on the tax? So very much watch this space kind of stuff. Lots of interesting questions. I'm not sure I have very many answers, but I'm happy to take questions. And I'm sure, Antonio, you do the same on the EU FTT piece.
Ali.
Move the question over lunch, if I may, just on the spot.
Even better. Yes.
So that's a great invitation to discuss Hungarian FTT over lunch. But as Sinthu has highlighted, there are lacuna to be filled in, given the paucity of actual written material from the authorities. Thank you very much for